Oh, there's a countdown now?
Yeah.
Is there always a countdown?
Welcome to DH Unplugged, your weekly blast of tech and market intel where the signals matter and the noise gets ignored. JC Dvorak brings the tech and AI firepower, the guy who actually understands what's happening under the hood while everyone else is still rebooting. And Andrew Horowitz, the money guy, delivers market perspective with a directness that cuts straight to what matters. Together, they navigate the week's tech and market madness with fast, sharp, and entertaining insights. Let's join JC and Andrew now.
Hey, I'm Andrew Horowitz.
I'm John S. Dvorak, or JC, or whatever we're going to call me.
Yeah, and if you're confused about the JC versus the John S. Dvorak, don't worry. So is everyone else. We can get down to
so, yeah, I can explain that real fast. My
Okay.
initials are C and S for computer science.
Oh, come on. Please.
No, it's I have the C of my father, and then I added an S.
Yeah. Well, I think your dad didn't want to have a John Jr. somehow that was exactly the same, if my memory is correct.
Yeah, he did not want to be a senior. So
Oh, right. That was better. He didn't want to be a senior. It
Yeah.
wasn't about being a junior. It was about being a senior. So
yeah, it was fine with me being a junior.
Yeah. So let's talk about a few things. I want to loop back after we talk about some of the warm-up features about what we're going to be talking about tonight and loop back to your time with, we talked a little bit off air right before the show about TikTok and some of your experience there, because that is something we're going to be adding a lot of streams, a lot of different socials, as I call them. We're going to be adding, if you haven't noticed yet, if you haven't been paying attention, we have added already a whole suite of technology. We have videos, we have clips, we have like a kind of a few things that are popping up all over, what is it called? X, formerly known as Twitter.
X, formerly known as Twitter,
Yep.
probably be called Twitter again in 5 years.
Probably.
Yep.
And then when it's spat out from SpaceX.
Yeah, when Musk is like, I don't want to play with this toy anymore.
Yeah, exactly. I want to build another a spaceship that has fire breathing capabilities, and then
it's been cat girl robots.
oh, we also have a YouTube channel, but the YouTube channel right now only brings in our audio, so it does a link to our RSS feed, and you can listen to that. It's not very heavily listened to. Apple, Spotify, Amazon to a lesser degree. Of course, the No Agenda stream, which many of you are out there listening to right now, and we are live on that throughout the week also. We also come up on that. So those things plus the adjunct socials, the collaterals, if you will, we're going to be expanding substantially over the next, give us some time. Give us some time.
We're going to make it way easier for everybody to share the funny or insightful comments that are made by either of us.
Or the dumb ones.
No. Yeah, the dumb ones too, but less excited about sharing that.
Yeah. Well, those are the ones that usually get the most shares, right? The bloopers, the stupid stuff.
Yeah.
You know how that goes. Let's talk about some of the things that are happening right now, because it looks like things are getting a little bit weird. Someone is panicking, and I'm going to name that name. We have 5.
Oh, you have a name?
Oh, I have names. I have names, by the way, but one particular name. We're going to talk about the 5 dumb things that are happening right now. It's a one-time only special on DH Unplugged. We put together a list of blunderous, booby-headed, dumb-ass items that have been going on in the financial world.
There's a lot, actually, even more than 5, but we're doing the top 5.
Right, top 5. Just the top 5. Let's Casey with your top 5. We're going to talk about that, the dumber side of finance, was we're calling it. Also, the Cold War, the hot war, Canada, China, Iran, economic D-Day. This is all going on. It's pretty remarkable. And saying goodbye to Dolly Parton.
It's horrible.
The greats are leaving us. We
can't keep losing role models.
I know. Dolly Parton. So I understand that it is going to be a national holiday that the president had ordered, or maybe not a national holiday, National Day of Mourning of something of that nature, where the president has ordered, I believe, flags at half-mast.
Oh.
That's my understanding, at least.
I mean, now we know he's a tit man.
Ah, yes. A upper body, which I don't think.
Upper body, upper body in country.
During COVID, when everybody was sitting in front of, instead of having in-person meetings, everybody was doing their remote kind of stuff. And everybody's like, half the people were in their underwears. And the rest of the people were doing all this weird stuff as they were on meetings. We heard about those too, which I never really understood. But I was going to come out with a clothing line called Waist Up.
Oh.
It was only going to be one part.
Shapewear?
It was going to be the wear. It would make you look like you were wearing a full outfit, but be comfy down below.
I mean, couldn't you just wear a button up and just not wear pants?
Yeah, but I was trying to make money on it.
Oh, I see.
Yeah, so it's
So it's sort of like
good name.
or those leisure suits.
Yeah, or the guys that make these shirts that look really good on Instagram, with the very tight arms, those tight shoulders and all. It makes you look really buff, but it's all a game. And I thought I would just call something Waist Up, and it would have a little bit of curb appeal.
I was thinking of the opposite. My thought was we could sell burlap underwear and sell it as helpful for like circulation. And if it's this uncomfortable and all that, that's it. It's working.
It's working. Oh, I see what you're saying. So it's like the Emperor's New Clothes, or something that we try to put upon the public as something that's good for you because it doesn't feel good.
Yeah, it feels horrible. It's terrible underwear, but it makes your dick huge.
Oh, but
patent pending.
We're not happy until they're not happy is our slogan.
Yeah, of course.
All right, let's talk about stupid is what stupid does. Of course, we talk about gold, Bitcoin moving higher on the lower USD. They're talking about the news is all aflutter, my friend, about this debasement trade. That's the latest news you see going around. The idea that there is this new quantitative easing. We're taking the dollar down. We're getting out of our debt by extinguishing it through lower USD.
Yeah, you inflate it away.
So ridiculous. Let's talk about some of the stupid things that are going on. And we have some, why don't you take the first one because it's the right color for you there. So you're brown.
I'm brown.
Do you see that? You colorblind?
I see. Oh. Lower beef prices.
That's you.
Yeah. Oh, yeah. So my big question about what's going on right now is that we've the administration has kind of tacitly acknowledged that tariffs affect domestic consumer prices, because why else are they framing their story this way? That we're getting beef costs down by reducing tariffs, which certainly counters the narrative they had earlier, which was, tariffs don't impact the consumer. It impacts those terrible distributors and businessmen who are using imports. So my big question to somebody who's a little more knowledgeable about finance is, if reducing tariffs is supposed to reduce beef prices, what does that reveal about who was actually paying the tariffs?
Well, I mean, all along I've been a staunch, I would say, let's put it this way. I was on the other side of the argument about this idea about tariffs. Tariffs clearly from Eco 101 or Eco 1 for that matter, is it's an extra cost to an item. Now, that doesn't mean, by the way, that the tariff can't be absorbed by somebody else temporarily. You can have a situation where a company that is out of the country is going to maybe say, you know what, well, we're willing to absorb this for a while because we think it's temporary. Margins should contract on that. And you want to lay that off as saying it's on somebody else, but it's basically a tax. And the tax is paid by somebody. And usually when companies are involved, they're going to lay that tax off on me and you, because what's going to happen is that they're going to eventually say, screw this. We're not paying this anymore. We're raising our prices. We're raising our prices to cover things. And that's where the inflationary part. Now, a lot of people argue, well, it really wasn't that inflationary. There wasn't that much tariffs in totality that would do a huge move. But I dare say that the fact that we had tariffs did not help bring down inflation. And in fact, the sticky inflation problem that we have, and we've had for, 5 years now, 6 years, going on 6 years, is not due to the only thing it's not due to, there's several things, right? It's not just due to the excess of spending that was paid during COVID. It's not only due to the Biden Inflation Reduction Act that was pure asinity, stupidity, moronity.
I mean, helicopter money's fun at first.
Right. But this is dumb.
I mean, who didn't buy a mattress?
No. Good point. Or a new car, or a dining room table from Wayfair, or, any of those
Yeah,
things.
it stimulated some economy.
It did. So this was, I think, an interesting area where a lot of people, it's very hard to pin down. It's like, it's like there's something in the air, but I just can't figure out what it is. And maybe it's somewhat, it doesn't have an odor, but if you hang out long enough, it's going to kill you.
Well, there is a small odor about the beef tariff deal that Trump has done, and we haven't figured out which country it is. Because if it is Venezuela, they use a lot of chloramphenicol, which is a historic broad spectrum antibiotic that we don't allow in our meat, but they pump it up. The problem with that one is that in the reason why we can't have it in our meat in the U.S. is because it can cause aplastic anemia in people who eat that meat. So we will see.
These are details. We don't worry about the details. We worry about
cheap meat.
Yeah, we get cheap meat because you know what? We're going to do it for the next 3 months. Guess what is going to coincide with? Everybody's going to be licking their chops with all sorts of chops, by the way. We're going to have all sorts of steaks. We're going to have all sorts of things that are going to bring the prices down somewhat, maybe, from somewhere that we don't know. And it may make us a little sick. But you know what? It may get a few more votes because they're working on bringing down prices.
We missed out on the good meat. We should have gotten Argentinian meat.
Oh, that's good stuff. That's good
stuff.
stuff.
Gotten meat from Argentina or Uruguay. That's some great meat.
Have you ever been to an Argentinian barbecue?
Yeah. No, they have an entirely different idea of grilling, which is like they want all of that oil to not ever go in the fire. Yeah, so the smell, the oil never burns. And so you don't get that additional flavor, which is that very American barbecue taste.
Yeah, of the sizzling burntness.
Yeah, the sizzling burntness. So they have a much cleaner sort of barbecue style for grilling specifically. Yep. They aren't really barbecuing.
And they have great sausage, blood sausage they have on their menu.
Oh, yeah.
Picanha, which is wonderful.
Yeah. No, I mean, they have some great, they know what to do with meat.
They do. What about the next story? We got Iran now, right?
Iran. So, it was a Treasury warned countries doing business around they could face secondary sanctions. This sounds like deja vu a little bit to me because last time around when we engaged with Iran, we also warned everybody like, hey, by the way, we're going to mess with them. Iran's economy has been doing very well against what the mainstream press has been saying. They rebuilt every bridge that was destroyed during our first bombing run already. Meanwhile, what we have in the East Coast, we're still working on it. Anyway, so new sanctions hit about 60 individuals, companies and vessels. Again, very reminiscent, very deja vu. It reminds me of the opening of the Ukraine war, where we sanctioned a lot of Russians and then we took their yachts. And then I guess we had a little party on their yachts and then we sold them. I don't know what we did with their yachts. We also broke a very common rule we used to have a long time, which is we did not steal people's bank accounts. That's apparently up for grabs now. So anyone
Again, you're getting into
Iran,
the details. You're getting into the details. Why must you get into the facts and details?
I know it's not popular anymore, but it's kind of interesting. That said, all you listeners out there who have those big deals, those billion-dollar deals with Iran,
yes,
you should probably disengage right now. Wait until the next election cycle.
What's interesting is this being called. We have to have a name like Epic Fury. This is Operation Economic Outcast. And if you are going to be now, first, just to be clear, a lot of puffery right now. Right? Yes. We're going to do this. I'm telling you, we're going to do this. You maybe heard me say this before. I don't know where my commentary sometimes merges with who I talk to. But the parent that says to the child, listen, Johnny, you're not being good. And I'm telling Johnny, stop it. Stop. I'm going to count to 5. I'm going to count to 5. 1, 2, Johnny, 3, 4, Johnny, 4. 5. It's got 5. Johnny, 6, 7. This whole thing. And what do you think Johnny's going to do? Johnny's going to be like, let him keep counting to 1 million. I don't care. So,
it's
same
old theory that threats drain the credit of power. So when you have a strong power or authority, every time you make a threat, you're basically deducting from your account. And then you have to pay it back by doing something that can follow up with that threat. And right now, we are facing a country that has only one border which we can invade from, and it's a water border.
And a wall and a giant cliffs.
Yeah, no, the entire country is built perfectly for not being invaded. That's the reason why Iran
Right.
has been around for so long.
Yeah.
Like the Romans couldn't properly pierce Persia. It's a wild. Everyone should look at the geography. It's a very hard country to invade, and so
And people
all we
wonder,
can
they're
really
like, what's
do
so
is-
hard about this? What's so hard about this? And the funny thing is, all we're trying to do right now is get back to where we were before to save
Yes.
face. And
Yeah.
this is not, in my opinion, a really well thought out. This is one more on the list of our dumb things. And we got a few more. Let's talk about the Treasury tries
Yeah,
to
go
do, tries to tame long-term yields. Sometimes it could be, well, if the Fed did something like this, it would be called Operation Twist. Again, another name. You have to have some kind of name for something. So Operation Twist was done back, I think, was it Bernanke or Yellen? I don't remember which one it was, but it was one of the two. The idea was, okay, here's what we're going to do. We're going to start to work on targeting the yield curve where we want yields down more than other places we want them down,
Yeah.
and really focus on moving from buying those bonds in maybe the longer term to push down longer rates rather than the shorter term. So the Treasury, Scott Bessent, different department than the Fed. The Fed can create money out of thin air and buy bonds, therefore creating a true debasement of our currency because we're creating more currency, and from there buying these bonds along the curve. And what that would do is they call it a sanitization by buying it by creating money and buying it. That creates an artificiality of the actual yield. Now, when the Treasury does it, they don't have any money. Treasury doesn't have, but they have money, but they don't have money out of thin air. But what the Treasury is doing now is they're allowing for some of the roll-off to happen in the shorter term bonds and buying the longer. He said from $2 billion to $4 billion a month. Markets were initially kind of shocked that he was doing this.
Mhm.
Dumb, because and what's even dumber. This is really dumb. What's even dumber is that the public is buying this whole charade as a debasement deal. There's nothing happening here.
Yeah, but let's swap. I'm going to take the counter argument here. It's not that dumb if we are convincing retail buyers that it's true.
Correct.
That does have impact. So in terms of image control, they're doing well. That said, it does sound like QE with a different name.
It does. So back to the dumbass finance, okay, just for a moment.
Yeah.
And why I put this in this category, and I thought we would talk about this, is that while it is taking the dollar down slightly and it is moving gold and definitely Bitcoin above the 80,000 mark for a moment there. And we'll actually, what we'll do is we're going to look at where Bitcoin is right now. So let's take a look at this.
Oh no.
Oh, yeah.
Listeners, sit down.
The Bitcoin is now at 78,819, down a little bit from the peak where it was 80,000 earlier. But the thing is, it is up from about, I think where it started was about 65,000. So it's up about 14,000, about 20-something% on this news. Why? The idea that the government, and again, if you want to believe in something hard enough, your mind will play tricks on you to make it good. It's like when you have a single bifocal in one eye, tricks the brain to think you have one is nearsighted, one farsighted, tricks the brain to allowing you to see perfectly. This is what's happening here. It's all a trick of the brain. There is no quantitative easing going on. The dollar is down, but not that much. The fact is that everybody just wants to buy it. That's an excuse. We saw this because the day after this whole blunder, and we're calling this Bessent's big bond blunder, a little tongue twister for your evening.
Yeah.
If it did work, rates wouldn't have backed up right to where they were before the blunder occurred. So nothing's happening.
There's a huge amount of inertia. Like it's a very massive thing to be able to try to manipulate using words and these little games they're playing. Like it's not the same as what we did in 2008 where we were just changing the numbers directly.
Right.
Here we're trying to like do manipulation. My view of it is that it seems a little arrogant to like it seems
smug.
like
It's smug. You ever watch Bessent on TV?
Yeah. Yeah, it's in brand. He's on brand. So that relates to the.
If you have video, you'll get this. If you don't have video, you're not going to get this. What I'm doing right now. You got to watch the video. We'll try to find what this clip. Here, I'm going to go. Bess and Smug. Ready?
Yeah. No, he's
head up like this.
Yeah, well, and at the same time, he uses like, I just don't have a lot of faith in him, I guess is my polite way.
Well, when he starts talking like Trump, it's a problem. Not that what Trump is saying is a problem, but, and again, this is not a political discussion here. It is a reality that when he says things like what the world, like for the likes of what the world has never seen before. I mean, he says these things like, dude, that is not kind of stuff you talk about when we talk about finances. Be respectful.
You can do that if you're got a big old MacArthur style like Cobb pipe, and you're going like, and they'll feel it now. You know, if you try to, he's a threatening energy, but he doesn't. He's a middle manager who's gotten very high in terms of his ranking, and he's got this quality to him that feels sort of like he's somebody's great second, and somehow he's gotten to the top.
Yeah. Let's go through, but here's the real punchline to this. And if you're listening now and you're like, oh, who cares about it? Here's the punchline. Take number 4.
The TLT.
Oh, yeah.
So TLT's has a huge amount of buy-in. A lot of inflow since August 18th, which I'm on TLT. I just bought up on TLT.
You did?
Yeah, I did.
Yeah.
I had a sense. My instinct was not what I think everyone else had, which was that I saw there was a pullback that occurred right before that, and I felt it was wrong. And so when I see a movement that looks incorrect to me, I'm like, well, you know what? I'm bored on Robinhood. I'm just going to throw some cash into this.
Yeah.
And so now I have money to get my son to Great Wolf Lodge.
Oh, there you go.
Yeah.
Very nice.
So, so what an interesting move though, because there's obviously somebody
you think
moving on that. It could be internal because that's been done before. We've seen that behavior a number of times.
From the teleprompter, the guy that held the teleprompter was accused of insider trading, and whoever. This is a huge number. The day before this announcement came out, huge number buying into the long bond ETF, like things, the likes you've never seen before.
I mean, there's something that ended up crossing the floor, or the lobby rather, in Congress and the Senate, because they aren't banned from trading yet. And so it's curious what that is, because it's not lucky timing. It's information leakage.
It's not lucky timing. It's not a chance. It's not even close to lucky. It's ridiculous.
I mean, has anyone checked the Pelosi index? Because maybe the Pelosi portfolio changed.
I don't know. It's possible. I don't know.
So it's better than the reverse. Actually, no, the reverse Kramer right now is winning against the Pelosi index.
That will happen during these weird times. The Pelosi index is a tradable unusual whales. Is that what it was called? Unusual whales?
Yeah, I think Unusual Whales does it. What they do is they do recurring requests to get the information on what Pelosi's portfolio is, and so then we can track her trades. And then you trade her trades because she's ahead of everybody, because she's the one in the meeting with Jensen about NVDA and like screwing China or whatever. And so she makes the deal. Well, she tells her husband to make the deal.
Right.
And we can benefit from it by just following senator trades. But we have, I think on the House floor now is a bill to ban that.
That won't happen. That's not going to happen.
It should be banned.
Not going to happen.
I don't know.
The people voting on it are the ones that make the money on the deals. Why would they vote against it? There's nobody with that much scruples in the House or in the Senate.
Yeah, that's true. All right. I was being hopeful.
Yeah. Final thing, the next one. Final dumb thing on this whole list of 5, which is taking a little bit longer than I thought. It's about the dollar. Same discussion we've had really about this isn't quantitative easing. This is just hopeful thinking of the Treasury. He had actually come out on Friday, the day after he went and said that, it was last Friday, that he was doing this, and say, well, maybe we'll do more than $4 billion per month, because he knew it didn't work. So credibility shot, and there we go. Let's kind of move on from here. Let's talk about Walmart. Kind of interesting. Walmart is flashing a consumer warning to a degree. Interesting what was going on there. It's U.S. comparison. This is what I found interesting about this. This is the kind of thing that we talk about here. So on DH Unplugged, we don't just talk about the number and give you a statistic. Try to get behind things, right? Understand for the average person out there, what does this all mean? So we got a number from earnings on Walmart. The thing that stuck out to me about all of the earnings, because they beat earnings, it did fine. The U.S. comparable sales, when they look at comparable stores that were open, that's important. It's a very important thing when you hear about comparable sales. It's about stores that were opened in the same time period that they're comparing it against. And why is that important? Well, could you imagine if a company opened up 5 new stores, right?
I have to emphasize to the listeners, Walmart has the most. I worked a consulting gig with their data science team. They have the most impressive statistical and science group. They can predict how many items some place in Omaha will have in like 2 weeks because they have such perfect prediction models for everything. So when they send out a warning, I believe them, just like how Waffle House can predict hurricanes better than the National Weather Association. Because Waffle House has 24 hours and they're in the most hurricane, vulnerable regions. So they actually have an entire department specializing in meteorology, and they're actually
Is that true? Is this true?
This is true. This is totally true. So, Waffle House has a meteorological department, and the National Weather Association or department basically talks to Waffle House to confirm their readings, because Waffle House is perceived right now as the premier meteorological department specifically for hurricanes.
That's wild. Isn't that also because we probably defunded the weather service? No,
actually, the models that we have in the federal government are still quite good. Like that team is really tight. They're a very strong group. So
the guys, they love them. They love it.
When we defund them, we're basically defunding our stations, not our research department. So the stations are expensive to maintain, and so our stations are getting dropped. So we're losing data. But we're not losing the core team that are all these
That's good.
guys who love tornadoes. Anyway, so with Walmart has this amazing model for inventories and prediction models for how much they're going to be sold and what price is the best price. And so the fact that they're warning, hey, people are running out of money, I don't see that as Walmart trying to complain to shareholders.
It's not fake news, is what you're saying.
It's not fake news, and it's also not them lying to shareholders and being like, oh, I'm sorry, people don't want to go to Walmart. They're saying, we know every car that comes into our lot, and we know how long they shop, and we know these people, and we have scary models of everyone who goes into Walmart. If you go into Walmart, face recognition will track you. They will know who you are, and they will know what you buy, and they'll know your shoe size and your shirt size and all that. And they go, oh, the person who normally buys the lobster is now buying tuna.
Oh, that's right. Change the entire, just change up, bulk up on tuna and Weehawken.
Oh yeah, tuna. Well, Costco warned about this. The Costco CEO warned just a few months back, I think 2 quarters ago. He said that their customer base was swapping from chicken to tuna, which he perceived as a recession indicator.
Yeah, these things happen.
Yeah.
These things definitely go on. But what's interesting now is that what I found interesting of all this was that when you look at the numbers from Walmart and you see that U.S. comparable sales are up 2.6%, and understanding something, why is that? Is that good? Well, it seems okay, right? Yeah. Not really. Because if we have an inflation rate that's about 3%, that would take into account all of that gain. And therefore, pretty much flat. Not selling anything more than they've been selling. So, and then there's a natural limitation to how much you can increase your sales over time. People just need so many things. I mean, how many paper towels and Italian dressings do you need, right? I mean, it's just it's not like you're like all of a sudden now, and then you have to also look at the immigration situation as a potential drag, because a lot of people, especially low income, are shopping Walmart, right? Or the lower income, not low, but lower incomes. Everybody shop at Walmart. We're
not jujudging you, listener, who might go to Walmart.
I go to Walmart. I shop at Walmart. I love it. I think it's a great place. But that's something to consider when you look at this, and that's probably why Walmart was down about 8% on the day after their earnings came out last week. So something. Well,
related to this just a little bit, I got two pieces. One is that's not on the show notes. One is app sales on Apple's App Store are down for the first time in 2 decades.
Which would be like the first time ever.
Yeah, pretty much.
And what do you think that's? Wait. Don't just back it up a little bit. Why would that be?
So people who impulse buy apps, which is the most common demographic for app sales, that's who we sell to when you do a B2C app. You're trying to who's buying the CoStar app, the astrology app. You're buying it because you go like, well, maybe this will help, and so you buy it. You're not thinking through that purchase. So those purchases are down. App stores are down the first time ever, and they released a notice to everybody saying, hey, app stores are down. A lot of people are going, oh, it's the AI rush, but you can interpret it another way, which is they've been consistently decreasing their growth since COVID. It's more likely that impulse buys are down. And so people are not buying the app for $2.99 right now because they're thinking, I didn't buy the lobster at Walmart. I'm not going to buy an app.
I got to buy tuna? I'm not buying
I got to buy tuna right now. I'm not. And so some subsection of our listeners are going, oh, yeah, exactly. Times suck right now. Everything's too expensive. The beef's expensive. I don't have enough money. And then some other section's going I don't know what they're talking about. That section, it's value for value on this podcast.
Oh.
And spread your comfort a little bit.
And how do they go about doing that?
How would they go about doing that?
Well, people should know if you're bringing it up. People should know how to, just to give them that push.
Well, they should go to DHUnplugged.com.
Yes.
And then there is a donate button.
Yes.
And that donate button allows for them to use PayPal. If they can't use PayPal, they can send a check.
They can send a check. We'll get to that in a bit, how that actually works. But basically, PayPal, you could use credit cards and all that good stuff. So that's pretty easy.
Yeah, you can use whatever you want. And subscriptions are, they decrease my heartburn, but lump sums are pleasant for everyone.
Yeah.
As for everyone else who go, oh my God, I can't even buy an app on the App Store right now. I say, tell a friend, have them listen to this podcast.
Yeah. Tell a friend and have them pay for your way in.
Yeah, there we go.
I got an idea. Look, you tell a friend. You say, look, I get $50 a month to this podcast. You got to do it too. This way, you kind of get 25 together. So you're in a tag team.
and spread the wealth of our knowledge.
Yeah, exactly.
Right,
let's talk about Venezuela for a minute. We got to go to this because I think this is pretty interesting on what's going on there.
Yeah. So they can't ship it fast enough.
It's unbelievable.
I mean, they just started building out their infrastructure, but most of their infrastructure is still quite old. They haven't really. So Trump intervened, made it so that, hey, you guys can get a bunch of more oil. Get your oil. Get that oil. And nobody really jumped in and said yeah, I'm going to start building out today. And so we have a situation where they don't have the infrastructure to actually ship it out fast enough, despite having this wonderful surplus.
But it's raw because they don't have refining going on there either.
Well, yeah. And then on top of it, we are down on refining facilities. California coast, we've closed many of them. And then Texas is still recovering from hurricanes from 2 years ago. And so we're actually low on refining as well. And then, of course, there are a number of great facilities in the Middle East that are now gone for some reason. And so we need to, there's a lot of demand for building up the infra for refining.
Have you been tracking or reading anything about the fact? Well, I'm sure you know that around the world and in the United States, the reserves, our strategic petroleum reserves, are at significant levels that are reduced and diminished from where they've been many years ago. I think we're down to the 1983 levels here. Some areas around the world are down to 10%. China has a lot. China, by the way, is 90%. The 90% buyer of Iranian oil is China. And just to back this up and bring this way back around to this whole operation,
economic theory,
hate your neighbor or whatever it is. The thing is that by us telling the number one export, I think we'd agree, from Iran is oil. And by us telling everybody that if anybody uses them, you're going to be on our shit list as well. That's really directed at China.
Yeah, and I'm not letting the government know I have so much saffron in my house.
Yeah, no, you shouldn't. Of course
Delicious saffron.
Yeah, absolutely not.
It's from Pakistan, I'll say.
Yeah.
Um,
But here's the thing.
Well-
Here's the thing. With all of this is what I want to get to. This story about that I've been reading on several different sites. And by the way, when I say sites, I'm not talking about, Instagram or Facebook. I'm talking about reputable, hardcore reporting sites. The salt mines, the salt caves, the caverns that are in, I don't think we talked about this, maybe we did, but in Texas and Louisiana primarily, that hold the strategic petroleum reserves are so diminished that the walls are essentially drying out. And if we continue at this pace of having such a low overall volume inside of those, what's going to happen is they are going to be deemed unusable eventually, maybe permanently.
Yeah. So for the listeners, we use a big empty salt cavern system for holding our strategic oil reserve. It can't go beneath 20% because it'll collapse. We actually need to maintain it above 20%. The 20% left there is sort of a sacred share. You can't really pull it out. So our oil reserves are actually technically empty for all intents and purposes. We do have more than that, though. There are at least 3 classified oil reserves that are part of our oil reserve count. I don't know where they are, but I know they exist because there's a lot of loose lips when you go to things like DEF CON. And so we do have other oil reserves. The famous one is the one that will collapse if we empty it out further. So presumably we aren't showing our hand. And because we're a country that plays poker, I assume we do have other cards.
I would think so, because we're artificially keeping the price of oil down. And better yet, we should put a hat tip and a thank you to China. As much as everybody likes to, crap on China all the time, the fact is when you look at China and you look at what they've done in terms of building their reserves over the last several years and then utilizing them, even though there's been basically limited flow out of the Strait of Hormuz, that's helped keep prices down, because we really should be at a lot higher price right now.
Yeah, well, thankfully, China actually uses a lot more solar than we originally thought.
Oh, yeah.
So their energy dependence is not as hard on oil. They need oil for a lot of their industrial processing, not for electricity right now.
Yep.
So between their dams and and the fact that 70% of their grid is solar and battery, they already position themselves very well for an oil shortage, unlike Japan, Taiwan, Korea, Vietnam, Singapore, all those guys. They're in a really tough spot because they're hurting from this oil shortage.
Yep. Let's kind of move along here. Go and talk about NVIDIA for a bit. Let's talk about,
Sure.
well, before we do that, let's talk about a few things that you need to know about, which is kind of like, that's interesting. These are a little bit adjusted for today's move. NVIDIA from its highs, by the way, we're going to talk about some of the key players out there, down 9% off its high. AMD down about 14, 15%. Avgo, the old Broadcom, down about 20% off its high. MU down 20%. That's Micron Technology, down 20%. TSM, Taiwan Semiconductor, down about 10, 12% off its high. Marvel, down 28%. And Intel, who would have thought, down 35% off its high. Coming up this week, something very important, NVIDIA. Big stress test for the markets, because what we have here is earnings coming out and expectations are sky high. This is after the close on Wednesday. So this is, a lot of people are saying this is going to be a referendum on the AI trade. I don't know. I will tell you, lots of things that people are looking at.
I mean, there's an obscure stock that kind of important, which is that 80% of all the slides, that is the sliding, the part that you put a rack on and you slide it in and out for your data centers.
Right.
70% of them are made by one company called King Slide Works. And it's up about 400% in the last year.
Okay.
About 4,000% in the last 5 years. They are required for all data centers, and they're like they have a larger margin than NVIDIA, about 85%. And they have been consistent at being an early indicator of NVIDIA. So when King Slide goes up, NVIDIA will go up. And when King Slide goes sideways, NVIDIA goes sideways for a little bit. And when it dips a little bit, NVIDIA, because it's a you have to buy King Slide to build a data center out. And data centers are the largest driver of NVIDIA revenue.
Right.
But you can buy King Slide first because they have much greater capacity for generating these little these little rails that you install.
Yeah, the rails don't have a billion different transistors on them.
They don't. They do not. That said, they somehow have become the company that sells them.
Yeah.
So right now they're going just a little bit sideways. They've gone down 2% in the last 5 days. Today they dropped by 2.7. Most of their loss has been in the last 2 days. So NVIDIA is going down. It's probably going to go down a little bit. But that said, the Ultra Rubin, the next chip size they're coming out with, the reason why they're doing collateralization, the reason why they have to do all this stuff is going to be another step function up in terms of efficiency. And so everybody's going to buy them again because every data center that exists that has NVIDIA and are being attacked by local governments for being water wasteful, the Ultra Rubin already is rumored to have lower heat requirements and therefore will save on water and save on all these things, make it more environmentally safe.
So therefore, what happens to the depreciation of the old chips? They basically
the old chips,
they're done.
The old chips will do the same thing they've always done, which is about halve in value.
Right.
And that's the reason why they're collateralizing.
My point, though, is this is a discussion that Jensen Huang has had about the depreciation that everybody's saying, and he's saying, no, that's not true. It's 5 to 10 years versus 2 to 3 years. But if this happens,
so there's two markets. A lot of people who might be listening who develop know these two markets because you experience them. One is you want the fastest, newest, smartest model there is. And then there's another half of the market who doesn't care. The market that doesn't care is actually larger because they just want the cheapest thing that kind of does the thing they need to make the, whatever thing they're doing. And then there's another half of the market, which is the smaller part, which is the ones like, no, I need the smartest Opus Mythos. Jensen points out, hey, that other market that doesn't care about it being the smartest thing ever, they're the larger market, and that's where your value is actually coming from. The people who just want to have, make the tits on that woman larger using some Gen AI, they don't care that it's got a Rubin, a Vera Rubin,
Billy Rubin,
any of these, they don't care. It doesn't matter to them because it's commodity.
Yeah.
So the frontier edge is not commodity and very valuable for a different purpose. Is that if you're a developer or you're doing math, you kind of want the most advanced. But if you're anybody else, you don't want to be paying that much.
I will tell you, though, there is something as a bit of a tell. When a company comes out with an important announcement, particularly of a price increase or something of that nature, so close to a earnings announcement, scares the bejesus out of me.
Yeah, that makes sense.
So we've seen this over the years. I've talked about this on the show many, many times. And we're like, keep a watch on this. Let's see what this means. When NVIDIA comes out this week, it talks about a 15% increase in workstation servers, blah, 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 of the product, et cetera. And by the way, doesn't move the stock at all. Any significance.
Not at all.
But they come out with this so close to earnings announcement. What does that mean to me? So a lot of things it can mean. What it means to me, and then I'll shoot it over to you, is that their earnings may be concerning, but they could use this as a backdrop of, don't worry, we're increasing our prices, therefore we'll be fine moving forward. That's my take.
Yeah, so I can see that. I can see the concern of we're increasing prices by 15%, and because we're losing sales by 15%, it evens out. Or 10% or whatever. Look, it's still growing. Our revenue's still up. On the other hand, we remain with a massive shortage of memory supply. And the direction that the chips have been going is that we need larger memory because these big models require this massive, massive amount of memory. And Samsung and Hynix and Micron can't produce it fast enough to also support all the CPU demands that we have.
Yeah.
And so the 15% price increase might be them admitting that they're eating some cost. So the question I have is the margin shorter? Are they under a margin pressure, not a sales pressure? So is their margin getting eaten? If their margin's getting eaten, then of course they have to increase price. If their sales are falling off, then 15% price increase is definitely what you think.
Yeah. I mean, I'm just saying that sometimes when it's so close, that's all I'm saying. When it's so, it just seems to be just like always, it makes my ears kind of wiggle a little bit when that happens, but we'll see what happens. A couple other things to talk about. You want to talk about the trade fight with Canada. Now we are hurling slurs and everybody's kicking up the sand like two kids in a school yard brawl.
I remember when I was a kid, South Park had a joke of blame Canada because it was so ridiculous to blame Canada for anything.
Sorry. Yeah.
And so now we're in a trade war with Canada where their trade with us is still minuscule. It's nothing compared to Europe or China or even Japan.
Yeah. And
so we're now doing 50% tariffs. Who from Canada pissed off Trump? Is it just because they said, no, we won't be 51st state? This seems very weird.
The whole thing is weird. Well, remember we did the UCMA? What the Mexican Canadian deal we did, right?
Oh yeah.
That was the best deal ever. We got rid of the old one, which was for some reason was no good. We got a new one that was the best thing ever. Now we got rid of that. You know, it's a constant. I don't know.
It's not great because
it's tiring. It's tiring.
One of the things that this is throwing a wrench into is for a very long time, American businesses would manufacture over the borders in Mexico and Canada, and then they would have the final assembly in the U.S.
Right.
Maytag being a pretty famous one where the final assembly was literally plugging in the plug, like the power supply.
Right.
And we also did this with Canada for a number of different manufacturing devices and refrigerators. And so Trump has thrown a wonderful wrench into that scam at the same time, because it is not honest. Come on.
Sure. No,
guys.
of course.
Like, hire some Southerners. We've got a ton of people in the South.
Of course. Absolutely.
And improve their education so they stop trying to eat things. It should be.
What does that even mean? What does that even mean?
Yeah, the listeners out there who are in the South know those guys. Okay. They know those people. They're in the.
Quit while you're ahead, buddy. Quit while you're ahead.
They know. I'm not
you
going
just
to.
lost an entire state.
I'm not going to say anything.
You also just lost an entire state of listeners.
I didn't because they know they're the other ones. They're not those guys.
Oh,
they know they're not those folks. That's their either family or people that they know down the street. They're not the ones listening here. They know not to put that in their mouth because they're listening to us. I am being as polite as possible.
All right, let's keep going.
Honest. Anyway,
see where it goes.
Housing, buyers keep disappearing. Let's jump.
Yeah, this is interesting, right? I mean, we saw a plunge of about 10.5% in new home sales, which is kind of interesting. The median home price fell to about $395,000, which is the lowest in about 4 years. This is very geographically, I would say there is a lot of geographic boundaries going on or different differentials going on here. Some areas are still hot, right? You can find areas that are very warm, tax advantageous, Florida. Some other areas that are horrendous when it comes to taxation and overbearing governments, California. And New York, there's these things going on that there's the continual move from one place to the other. But a lot of that's starting to wear off a little bit because the pricing has gotten ridiculous. So people are staying, they're not buying, they're not building. Only about 5.2% of the consumers in whatever poll it was said they expect to buy a home in the next 6 months. Again, we don't know how accurate that is, but we are going to see a lot of economic talk coming up, starting, I think, Thursday at Jackson Hole, Wyoming. The economic, as I call it every year, I'm going to dust out the phraseology, the economic confab that brings on all of the mucky mucks to talk about things about theoreticals. And Kevin Warsh is going to be speaking. There's a lot of eyes on this discussion of, is he going to clean up the mess he made for himself as his last outing, where he basically said, markets, you do your thing. Don't worry about it. The bond market will be able to handle it. It will do its job by itself. It doesn't need my forward guidance. It doesn't need as much of a dot plot. And the market, the bond market said, okay, we're going to raise rates, move it up. And there's a lot of talk about him having to back up, clarify, poke at that whole discussion to try to bring the prices down bring the rates down a bit by bringing prices up. So this is going to be Friday at 10 a.m. Eastern time. He's going to be talking.
Yeah, everybody wake up. Listen to it. It's going to be great.
Yeah.
I have a question real fast.
Uh-huh.
What do you think fixes housing first? Lower mortgage rates, home prices, higher wages, or sellers accepting the market?
You're going to kill me, but there's a combination of all those things. And what does it start with, though? The domino that pushes, it's going to be sellers accepting lower prices. Yeah. My opinion. Yeah, so this is how it goes. You go down a street, there's one house for sale. Everyone's like, I'm not selling yet, man. I don't know why would I sell. House is worth this amount. I'm thinking, I'll wait it out. Then all of a sudden, Johnny on the block gets this nice price and everybody's like, whoa, hello. So a few more people put up their houses. I'm still saying, I'm not selling yet. There's not a chance. A couple more houses go up for sale and all of a sudden the wait time starts increasing. I'm like, oh my God, I better get my hat in the ring because if I don't, I may miss it. So what happens then is that all of a sudden everybody's on the market. So the people that were on the market now that didn't sell their houses are saying, oh man, look at this. He just put his house up. I better step in front of him. I'm going to reduce my pricing. I want to get that seller because if I don't, it's going to go the other way. This is a very emotionally charged. I remember when I was buying a house, 2014, circa 2014, Horowitz buying a house. My realtor said to me, look, let me run the whole negotiation through this process. I know that you're probably really good at this, but you're the homeowner. You'll get emotional and be out of control.
Right.
Fast forward to a offer came in, and I said to the broker, okay, it was actually, I was selling a house. Part of it, I was selling a house.
Yeah.
I was selling a house and said, I don't think we should accept this. I'm like, well, what do you mean? Well, this is, all right, fine. Goes on a little while. She starts panicking. They want to buy it, but I said, okay, let it go. They definitely, I could see from those two offers coming in that let's pit them against each other. No. Oh my gosh, what if we lose one of them? I'm like, wait. Let's pit them against each other. Let's get this thing going. Let's get a buyer's war going on. Oh my God, I can't do that because we'll lose. I said, you told me not to be emotional. And you're being totally emotional about this. You're out. I said, sit on the sideline and watch how this goes. We put them against each other. There was an extra, $25,000 that was made on the deal. So it's very emotional, the housing. It's
and it's
like with all money.
That's the cause of all the inertia.
Yep.
Like everyone's emotional about their houses.
Yep. We also have the PCE, which is another phraseology. You have to say every time you say the words PCE, the Fed's PCE gauge, the personal consumption expenditures, you have to say the Fed's preferred measure of inflation. Have to say that.
Yes.
Every single time. It's coming out. And expectations are they're a little bit tamer than it was. We're going to watch for the tariff, energy thoughts that are in here. A lot of companies got back tariff money. Hundreds of millions of dollars because they were illegal, by the way. Just to let you know, tariffs are illegal.
When does it come out?
This is coming out probably Friday.
So when does the tariff on beef deal impact that number?
Next month, 2 months.
Oh, okay.
It's going to be more of, and it's not a big part of it, but it's enough. You still have gross vegetables that are a real problem. As a matter of fact, a recent poll done was looking at, I think I just saw it this morning, was looking at what is the biggest concern you have in your life in terms of money and concern, and groceries was number one, not oil.
Yes.
Very pricey. Very, very pricey. Wrapping it up on a couple other things here. Europe quietly getting interesting. European stocks slipped last week, but there's been a lot of money flowing in. Now, this is something that we've been a part of. We've been pressing the emerging markets and European stocks for a while now. Mm-hmm. And activity is growing. And a lot of people are thinking, oh my God, all they do is vacation and sleep and drink red wines. And how could this be a good place for companies? Fact is, though, there are plenty of companies that do well there. And what's interesting, and their valuations are much lower than here.
Yes.
So people look, oh, you know what's really interesting I found this week too? Oh, this was unbelievable.
What?
I looked at something because we track it a lot. I knew this number, but I was really shocked at how big the divide has become. There is two sides of the market that we look at. One is called the growth side. One's called the value side.
Right.
The growth side is your technology, your biotechs, your consumer discretionary. It's a whole host of things that are very variable, that could really pick up, that could really move fast. Whereas the value side, your banks, your financials, your utilities, your staples, your healthcare, kind of like, not as exciting. It's not like we're really talking about, oh my God, do you see that everybody loves this bank all of a sudden? That doesn't happen. We talk about or how about this? Oh my gosh, what a great utility idea I have for you. It just doesn't happen. Yeah. Well, the differential this year between the growth side of the equation, the tech stocks and all that, and the value side is like 12% in terms of total return. Huh. The value over the last year is about the same. Yeah. Here's what's really interesting. With all the growth we saw over the last 5 years and how value and growth for a number of those years was very separated, growth was always the play. Everybody wanted to be in tech. Everybody wanted to be in. Yeah. It's narrowed it down to an even match in 5 years. That's unbelievable.
What's this?
Unbelievable.
When has this happened before?
This has always happened. What I mean by that is...
When it matches?
Well, it usually should stay pretty tight over time, within a few percent, right? Standard deviation of those is relatively, I would say, over time. But here's the thing that where people get, they don't do the right thing. What they should be doing is when we see that divergence so dramatic, the ratio or the contrast between the two is so wide, you start leaning on the other side, which we did a few years ago. We started leaning on the value side because the disparity of returns was so enormous. I said, and what you have is something called a reversion to the mean. And that trade usually happens. Now, it usually happens. It takes longer to get there than you think, because the momentum usually takes things on its way, but it's happened again. Once again, proving that patience pays in some of these areas.
You get the wildest returns with patience.
Yeah. So kind of interesting situation. What else do we have to talk about? You want to take Big Pharma?
Big Pharma. Let me see where that was.
Everybody's getting I saw some interesting statistics tonight about liquor sales. Liquor sales are down dramatically.
That's because Gen Z. So that one's really easy to explain. So during COVID, Gen Z were in college. So college is the time when Americans and Europeans and British learned how to drink. And so that entire period, they were behind Zoom calls and you didn't learn to drink. And then the second aspect is something I've learned from mentees and people I know. They're afraid of drinking alcohol because they know people have phones. And by having phones on hand, they think they're going to make some mistake and terrible thing that'll destroy their entire reputation and their entire life because someone will have a phone to record them. So I went to this.
Oh, I see what you mean.
So I went to this festival that is tech free 2 years back. And I hung out with some 20-year-olds, 22, 24-year-olds. And they were totally teetotalers. They're like, I'm not going to have any. And then we made it clear, like, hey, no one has phones here. You can do whatever. You could drink and no one would ever know. And they went, you're right. And then they went through the entire life cycle of a college student within like a 4-day period of drinking way too much, having their first really bad hangover, going anti-alcohol and then being back to it at the end. And they explained to me like, oh no, I never feel safe. How could you go to a bar? You're going to say something wrong. You're going to say something racist or something bad. And then I'll never get hired again.
Is there a feeling of also doing like drunk texting and drunk emailing that may be problematic?
Yeah, they think so when they were in middle school and high school, they were in an era of everything was Instagram, everything was online. And so bullying, kids before the phone had time that when they left school, they were out of school. There wasn't any school anymore. But now they're always on. They're always online. They're always connected, which means that they have to maintain their brand and their presence and their proper image. And alcohol is directly at odds with their control over their branding and image and safety. And so they don't drink because they cannot safely drink. Versus millennials and everyone older goes like, yeah, well, I'm fine now. What was the worst that's going to happen? And then there's a lot of stories of what the worst is. But they are the ones who are traumatized by early experiences of the internet being a place where they're going to get dragged. So they don't drink. Yep. And then they are starting to get into it, though. So the alcohol sales they've been dipping for a number of years. They had the worst year ever a year ago. They're really bad, but they're starting to go up because it turns out Gen Z likes cocktails. And that's becoming a thing because cocktails allow them to be creative and develop things. And they're starting to get into that in their late 20s. And then Gen Alpha is what alcohol industry is trying to push really hard on. And so they're trying to get Gen Alpha, who are currently in middle school, I think, in early high school. Mm-hmm. They're trying to get them teed up so they can recover the sales.
We'll see what happens. Pretty wild stuff. And not to mention the GLP-1s that are also curtailing the drinking of my age group.
Well, it makes you drunk slower. You have a much stronger alcohol tolerance at GLP-1, which if you're just going for the buzz, not great. But if you're into wine or you're into like fine flavors, GLP-1s are actually ideal because it means you won't get wasted.
But a lot of people are there's also the other side of it where people are not desirous of drinking or eating on the GLP-1s.
But we're also not going out or socializing. Like, again, listeners, meetups. Socialize. It's
socialize. Get out there. As a matter of fact, we're going to post a video of the meetup from Fort Lauderdale probably tonight or tomorrow. I forgot what it was. Great. But we did the audio, but we have the video too. We did all video. So that's going to be posted on our X account coming up. All right, we're going to end it right there. And you have a wonderful week, and I'll see you again real soon.
Yeah.
You've been listening to DH Unplugged with Andrew Horowitz and John S. Dvorak. Make sure to come back each and every week for another action-packed episode.
Now, I'm not broke, but badly bent. I'm not down to my last cent, cause I got $1, but it's my last dollar bill. Yes, sir. In my pockets, there's a dent. All my dough is nearly spent, but I got $1, and it's my last dollar bill. Oh, I'd love just one more buck fortune left me by chance. Now here's a hint, I feel like a mint. You can hardly tell by a glance. I don't care, no millionaire can give me the icy stare, cause I got $1, my last dollar bill.
This podcast is intended for informational purposes only and does not constitute personalized investment advice. Investing involves risk, including the possible loss of principal, and past performance is not indicative of future results. The views and opinions expressed are those of the hosts and the guests and may not necessarily reflect those of Horowitz & Company, Inc., an investment advisor registered with the U.S. Securities and Exchange Commission. Registration with the SEC does not imply a certain level of skill or training. Advisory services are only offered to clients or prospective clients where Horowitz & Company is properly registered or is excluded from registration requirements. Any mention of third-party companies, products, or services is provided for informational purposes only and does not constitute an endorsement. Hypothetical scenarios or forward-looking statements are for illustrative purposes only and should be viewed only as that and not as guarantees. Content is intended for U.S. residents only and may not be applicable in other jurisdictions. Listeners should consult a qualified financial advisor before making any investment decision. Please visit our website for additional information, disclosures, as well as a copy of our Form CRS.